Good morning, students. We are on chapter number 6 of account part 2, that is cash flow statement. And today in this lecture we are going to solve sum number 19, which is given on page number 287. So on page number 287, this is sum number 19. From the following given detail, calculate cash flow from investing activities. Details are given for 2017 and 2016. So first item given to us is plant and machinery 9,20,000 and 7,20,000, and then it is given depreciation fund on plant and machinery. So friends, as depreciation fund is given in place of depreciation, that means whatever is the difference of plant and machinery, that will be purchase of plant and machines during the current year in absence of any other information. So here regarding plant and machinery, only two informations are given. One is given their balances on the last day of both the years, last day of previous year and last day of current year, and then depreciation fund is given. So whenever depreciation fund is maintained, that asset is shown in the books at cost price, right? So earlier the cost price was 7,20,000 and now it is 9,20,000. That means there are purchase of asset, that is purchase of plant and machine by rupees 2 lakh, which is cash outflow from investing activity. Okay friends, then goodwill is given 95,000 in the last year, and current year it is given 90,000, and no other information is given regarding goodwill. That means this is goodwill written off, so which is a non-cash transaction, so will not be considered here while calculating investing activity. Then patents are given 70,000 and 1,30,000. So 1,30,000 in the last year and 70,000 in the current year. Normally patents, which is an intangible asset, we will be assumed that it is written off, but if we see the last information given to us, it is about patents, and it says that some of the patents were sold during the year. So earlier the patents were 1,30,000, now it is 70,000, so there's a decrease of rupees 40,000 in patents. That will be what? Sale of patents. So sale of patents will be considered as an cash inflow from investing activities. Okay, right? Then 10% investment, earlier it was 2,70,000, now it is 95,000. So clearly it is seen that it has been sold off, and the amount is 2,70,000 minus 95,000, that is 1,75,000. What else? General reserve, earlier it was 30,000, now it is 45,000. Friends, it is appropriation of profit and a non-cash transaction, so will not be considered as investing activities. Then profit and loss account, it is itself a current year profit, whatever is the difference. Earlier the profit was rupees 40,000 and now it is 60,000, so it is just a current year profit of rupees 20,000. So it has to take nothing with the investing activity. Then equity share capital, earlier it was rupees 4,50,000, now it is 6 lakh, so there is an increase of rupees 1,50,000 in equity share capital, which is what? In cash inflow, but it is from financing activities, so it will not be considered while making statement of cash flow from investing activities. Then current, so equity share capital, for earlier it was 4,50,000 and now it is 6 lakhs, so there is an increase in equity share capital, so that is cash inflow from financing activity, will not be considered here. Then bank loan, it was earlier 1,50,000, now it is 1 lakh, so it is also financing activity, cash outflow from financing activity, so will not be considered here. Then current liability 60,000 and 90,000. So it is an operating activity, cash inflow from operating activity. And then interest received on investment rupees 18,000, so it is a cash inflow from investing activity. So this way we have to represent this, right? We are finding cash flow from investing activity, so those transactions which are investing activity will be considered, those which are not investing activity will not be recorded in the statement. So let us begin with the statement. Here it is. So friends, sum number 19, statement of cash flow from investing activity. First thing we record here, sale of patents. Earlier it was 1,30,000, now it is 70,000. So sold rupees 60,000. So sale of patents rupees 60,000, that is cash inflow. And then sale of 10% investment. Earlier the investment were 2,70,000, now it is 95,000. So there's an increase of there's a decrease in investment of rupees 1,75,000, which is what cash inflow from investing activity. And then interest received on investment rupees 18,000, this is also cash inflow from investing activity. And fourth item, purchase of plant and machines. Earlier it was 7,20,000, now it is 9,20,000. that means there is a purchase of rupees 2 lakh of plant and machinery. So that is cash outflow from investing activity. So only these 4 items will be considered here, and when we make the total, we find that there is total cash inflow rupees 2,53,000 and cash outflow rupees 2 lakh, which is shown in bracket, that is purchase of plant and machinery. So net rupees 53,000 is the cash inflow from investing activities. Okay friends, now this is the list of transactions which are not considered here, being the non-investing activities. First is depreciation fund on plant and machinery. It is a non-cash transaction, so it will not be considered here. Goodwill written off, it is also a non-cash transaction. General reserve, it is appropriation profit and also a non-cash transaction. Profit and loss account rupees 20,000, this is current year's profit, so it is not an investing activity, right? Then increase in equity share capital rupees 1,50,000, it is a financing activity, cash inflow from financing activity. Decrease in bank loan rupees 1,50,000, it is decrease in bank loan is rupees 50,000, it is also a financing activity, it is a cash outflow from financing activity. And then increase in current liability rupees 30,000, which is a operating activity. So friend, this is how we have to prepare our statement of cash flow from investing activity. This was sum number 19. In next lecture we will be doing sum number 20. Thank you.